Hello and welcome to our Market Current Affairs shows. With me today is Andrew Sachs-McLeod, FX and binary industry expert. Hello, Andrew.
Hi, Al.
It's great to have you in the studio here with
Thank
us.
you very much. Nice to see you.
Let's take a look at the current interest displayed across the industry in CFDs and the British spread betting model.
Yeah, absolutely. It's something that is recent. It's a really recent trend over the last year or so. The traditional British, very London-centric spread betting model and CFD provision has gained an audience of international companies, and some of them very large, resulting in some very big mergers and acquisitions and company takeovers.
Wow. So what do you think is driving the expansion of a traditionally British product across different regions, especially as we bear in mind that most of the global retail FX industry is quite different in its structure to that of the British non-MT4 based trading environment?
Most certainly is, and it represents a big change for many companies outside the UK. Britain had always had a traditional non-spot forex orientated system where the MT4 was less popular. Most companies, they had their own proprietary platform because of the nature of the type of trading environment that the CFD and spread betting system needs and requires. But now there's spot forex provision is not enough to keep a global audience satisfied with what products are available. So what's happening is there's been a big drive for international companies, some of them very large, to purchase British spread betting and CFD companies or take controlling stakes in them so that they can take that system internationally to offer equities, stocks, commodities, very, very varied asset classes on a contract for difference basis to a global audience. And that's really what's driving it. And there's one particular example, well, there's been two examples over the last year. One of them was Gain Capital's purchase of City Index in London for $118 million. Mm-hmm. The second, which is very, very interesting, is Charles-Henri Sabet, who is an industry executive from Switzerland, who took a controlling stake in London Capital Group in November last year for only £17 million.
Wow.
So that was, I started to follow that very, very closely because the idea was to rejuvenate the whole company. And that, we'll talk about that in some detail.
Okay, great. Let's focus a little bit on LCG's expansion. I can see that you have followed the recent restructuring of the company. How does this play out as an example?
It is a very, very prime example. And the reason being that in order to take a traditional product from a traditional British company in London, which is up until now hasn't necessarily been known as a technological innovation centre. It's been known as a traditional banking, traditional finance centre. But that has to change, and it is starting to change. London is booming in terms of its economy at the moment, for the first time in many years. And London Capital Group was up until Charles-Henri Sabet took a controlling stake in the company, was a flagging traditional 20-year-old company which was really focusing only on British institutional customers. It had very few mandates, lots of shareholders that were not getting their returns on their shares. It's a public listed company on the London Stock Exchange. It was making loss. It wasn't succeeding like the other companies. So Charles-Henri Sabet takes a controlling stake in the company, completely rejuvenates it. 80% of the staff were moved on, including the entire executive team, and they were replaced by some top quality talent from across the global industry, including Francois Nembrini from FXCM, who was chief executive of the institutional side of FXCM in London for 15 years. Armand Tamasebi, he's now chief operations officer at London Capital Group. He was at IG Group for 15 years as head of operations. And Peter Wells, 28 years Peter Wells spent at ICAP as head of USD and GBP. So they've got a really good management team, and then brought in a whole new trading system which replicates the same aggregation system that Citibank uses. So now ultra-modern institutional feed aggregation can be provided to retail customers. So that is now a good basis to take that abroad. So now you can send what they're doing is a very clever way of engendering partners, bringing different partners from abroad to take the LCG model. Rather than establishing offices themselves, you have either a franchise or white label partnerships, technology partnerships, liquidity partnerships, prime brokerage systems, which was all never really available before. So you can take this high quality publicly listed British company into an overseas audience.
As far as talent acquisition goes, how instrumental to commercial competitiveness is this? How can a firm like the London Capital Group get an edge over its traditional competition?
It's absolutely vital, because London unlike other parts of our industry. London had a very early start with institutional forex. It's home to the majority of the large institutions, and as a result, it has what I would call a college tie, public school British element,
right,
which is kind of steady and old-fashioned. Mm-hmm. So to be able to, and that's okay, because there are some very successful companies there, but to be able to get an edge, you have to be very avant-garde and innovative.
Sure.
And you have to bring the right people who have done this in companies overseas and made them successfwas
Of course.
So, but the difficulty is, you have the chief executive of the company, Charles-Henri Sabet. Why he was interested in buying that particular company was the ability to take this multi-asset CFD range abroad, but also the name London Capital Group is an excellent name.
Right.
It's a public, it's abroad. That is just fantastic. It's a publicly listed company. It's FCA regulated, and it's right in the heart of London.
Yes.
And it's a 20-year established company. This is some of the parameters that partners look for when they're looking to work with a high-quality company. However, it was a framework because it needed a total renovation. So talent acquisition is the number one thing. But the question is, how do you bring somebody who is highly successful in a very, very big company and has been there a very long time and has probably got some interest in the company to a company that needs a complete rejuvenation? The answer is that you're bringing the people who have done that within the companies that they represented before they joined London Capital Group to high success. And for example, you have Francois Nembrini. He really invented the franchise model and took it into institutions when he was at FXCM, including BNP Paribas, Citibank, large institutional mandates like that. So the next challenge is always something of interest to those people. So what happened was the company made a very, very intelligent way of onboarding them and rewarding them in terms of their how they can drive the company forward.
Right.
The same will apply to partners. Talent acquisition doesn't just apply to within the company, it applies to which partners they seek. They have to choose quality partners and engender them in such a way that they are going to drive their share price of the company up and also benefit from the success of the firm, including actually having a model where instead of having an IB model, which is often a conflict between company, IB and customer, instead of doing that, they will actually invest in the partner and then help them succeed, and then look towards a buyout at the end, an exit at the end, which I think is an excellent idea.
What is the overall sentiment with regard to the British multi-asset offerings from the perspective of overseas FX traders?
I think it's very region-specific, but of the very important regions that the whole industry is concentrating on at the moment, which is Asia-Pacific, the Middle East, Britain now, because Britain is booming, but it's also an institutional centre from where I call it an epicentre. It's from where that particular product is being sent abroad. For example, in China, China is really an IB model throughout. Some of those IBs in China are huge, but they can't see outside because the internet is blocked. They have no possible way of knowing which company they're dealing with. They will always say, contrary to popular belief, they will say, we're looking for a large range of assets, not just FX, although FX is massively popular in China. Chinese people don't want to trade Chinese stocks. They want to trade Western stocks, and they can only do that on a CFD platform because they can't do it in China. It's illegal. So there's that. They also want to be able to choose a common misconception is that Chinese traders want everything on price, low spreads, low everything, and do a revenue share between them and their IBs and the sub-IBs. Not really the case. They are looking for London-based, FCA-regulated company, even though that has no jurisdiction in China. It is a good symbol of a well-organised, reputable organisation. They're looking for more than 15 years established, and they're looking for public listing on a stock exchange because those websites are not blocked in China. So they can actually look up the company's performance and see whether the companies look at the annual reports and go through all the company's performance and actually see inside the company and analyse how stable that particular company is. So those are really good parameters. In the Middle East, it's all about reputability. And, if you go to the Arab Gulf region, it's all about how they're afraid of being, not having a reputable brokerage. So London is the capital for them, for traders in the Arab world. They look for a large range of assets because they also like the traditional investments, long-term contracts. If you look at the Dubai commodity, there's one new venue in Dubai, which is the DGCX, the Dubai Gold and Commodities Exchange.
Right.
They have an Indian rupee contract there, but it's a contract. It's a futures contract, like a CFD. It's not spot. Yeah. Most of the Middle Eastern countries are interested in CFD trading.
Yes.
So this is an excellent ground for companies like London Capital Group. And there are many, many willing partners there that have a high net worth customers that will be very happy to work with a London-based company.
Yeah. So what's next, Andrew? What do brokers, liquidity providers, and prime brokerages need to provide to their partners to make this model work properly?
Right. Well, the first and most important matter is to be aligned with their partners. And at the moment, what happened was the industry has very rapidly gone through a change in terms of the way it markets its products. Yeah. Whether it's to an institutional or retail audience, from digital marketing, which is no longer effective, apart from Plus 500, who seem to be the only company who can get that right. Yeah. It's very expensive, it's 1% conversion rate, it's short-term customers that don't know the industry very well and so forth. It's not effective. So it went to the IB model after that, because what that did was targeted specific introducers who had a client base. So therefore it made it easy to onboard lots of clients at once.
Yeah.
But that's great. But it sometimes results in a conflict because who's the client? The IB has built up a relationship with the customers. He then refers them to a company. He's independent. He has nothing to do with that particular company. Right. The client's then onboarded by that company. The legacy customers are then the property of that particular company, and that's it. And it's usually a kind of conflict between all three parties. So I think what they need to do is to start aligning themselves by investing in the actual partner, bring on a white label partner, an IB or a franchise, invest in them, whether it's some kind of share equity purchase or something like that, so that the actual introducing broker and partner becomes aligned with the brokerage and therefore doesn't have any, it makes it a more long-term proposition. They don't disappear after 6 months. It also gives them a chance to not only earn the commissions but also influence the share prices of the company that they're actually doing the business for, which means that the company doing the actual business can afford to maybe give them a slightly better deal on spread, because they can they can see the share prices of the company rise. So there are many clever ways of aligning themselves with the IBs, especially when you're working internationally and especially in the Asia Pacific region. Now Europe, for example, is generally not an area where companies go to, but this particular model will go to places like Germany, Switzerland, most definitely France, and this is again a kind of almost uncharted territory which needs some kind of alignment with the brokers they're going to work with. And I think that is a much better system than building organic desks and trying to sell without any interest in the actual partners.
This was very interesting. Andrew Sachs-McLeod, thank you very much for joining us here at the studio.
Thank you.
Thank you all for joining us here with the Market Current Affairs shows. We hope to see you next time.